Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HEMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey guys, welcome to SST everyone, welcome to Stocksnipertrading. My name is Ron, my partner is Dave. Welcome back, guys. I hope everybody had an amazing weekend, and it's good to see everybody. Welcome to everybody on YouTube, everybody on Zoom. Welcome, guys. This afternoon, we're going to do more of an education. We're going to do a thorough top-down analysis on US 30, how it's been moving today, where it could possibly move this afternoon. We're going to do like an introduction on what is a candlestick, open, high, low, close. These are things that we need to learn about, guys. We also have on the right, we have live liquidity, Bookmap feed if you want to use that towards your analysis as well. These are the offers in the market, the bids below us. This is the depth of market. This is the session volume profile, and it's on 15-minute time slices. And these are all the transactions that's happening in the market currently. I'll explain this as we go along. And this white line is like, it's considered almost like a moving average, but it is actually the VWAP, which is the volume weighted average price. And currently we are trading right around it. We're in a real range right now in the market today. On US 30. I'm going to be focusing on US 30 for this session, guys. So we're not going to be looking like at gold. We're not going to be looking at oil or anything like that. I really want to focus on one security, guys. Not so much for trading, not so much just hitting buys and sells, but to learn about price action, okay? So I really hope you guys can really take the time to learn about this stuff. And then at the end of the day, we can trade whatever security, whatever chart you guys want to trade, or whatever you want to do on your own personal time. But whether we're looking at gold or we're looking at oil, we're looking at US 30. You need to learn how to do a top-down analysis, and you also have to learn what is a candlestick, what are wicks on a candlestick, what does the body represent, how to locate support, resistance areas, things like that. So these are all things I feel that everybody needs to learn before hitting a buy and sell button on any security. Okay, this is very important. So we're going to treat this as a beginner class, or whatever level you are at as a trader. If you're interested in learning on how to do a top-down analysis, or you're interested to learn more about price action, then that this is going to be a good session for you and a good series that we're going to do together. Okay, so thank you guys for joining. Again, if you get good value out of today's session just at the end, so that I know that you guys are engaged and that we can continue this, if you can hit like a like, subscribe to the channel notification so that we can continue to do these. Okay, so welcome everybody. I hope everybody had an amazing weekend, and let's get to work. Okay, so what we're going to do is, before we start off trading, okay, you got to have a daily routine. You got to have like a routine that you do every single day. How many of you guys have a daily trading routine that it's like a religious, it's like you go through these every single day? I have a routine that I do every single day, and it keeps me focused. So I know if I'm deviating around this routine, I know something could happen. It might mess up my day and things like that. So stay focused. So what we need to do is, number one, we need to know coffee first. Before we do anything, guys, make sure everybody has coffee. Okay, number one, we don't hit a buy or sell or do anything unless we have a coffee in front of us. So that's number one. Make sure everybody, you got a nice macchiato right in front of you ready to go. Okay, and then after we get our coffee, the next thing to do is, what are we going to trade? What are we going to choose to trade? Some traders like gold, some traders oil, some traders like indices, some traders like forex, some traders stick with options, some traders are not even looking at forex, they're in the stock market, some traders are trading futures. So you got to understand yourself as a trader, what particular trader you are. Not only that, you should be knowing what type of trader you are for time frames. Do you like intraday trading? Do you like scalping these markets? Are you looking more for swing or positional trades? So these are all things that we're going to try and teach you. But number one, you got to learn how to do a top-down analysis and read candlesticks. Once you do that, you can trade on whatever time frame you want. You don't need to be looking at 5-minute candles. You could be looking at 31-hour candles and holding for a longer duration in time. But you learn every single candlestick has the same characteristics. All candlesticks, doesn't matter from 1 minute to a daily, all have, at some point, a candle opens, at some point it closes, and at some point, sometimes it's got a range where it makes a high and a low. And these are all things that you have to understand as a trader. This should not be a surprise for you. So these are things you got to understand, and then how the volume is moving. Okay, so what we're going to do is, before we start looking at any chart, we need to look at like your news. Okay, you don't have to come to Forex Factory. There's millions of news channels. You can go to Forex Factory. You can do FX Street. You can go to investors.com. You can go to Financial Juice. You can go to Bloomberg. You can millions, like there's a lot of them. Okay, so this is just really quickly, just a quick little analysis of today, of any big upcoming catalyst in the market that can drive the market in one direction or another. It's also broken down in the type of currencies, time of day, so things like that. When we had London today, I hope some of you guys saw, in London we had British banks and French banks closed all day today. That's why there wasn't a lot of volume flowing through London this morning, because there was bank holidays. If you didn't do your analysis or any research today and you were trading London and you had no idea why the volume was moving like this, maybe you had no idea that today British and French banks were closed. So this is just part of your daily routine. After you have your coffee, make sure you're checking. If I'm going to trade London, what do I got to know about? Is there any red folders? Or is there anything specific of a security that I'm trading that could directly be impacted by some volatile news? You know, so you got to be aware of this. Coming into New York today, what did we have? Nothing, not much in New York. So that's why it was a pretty stable day today, Monday. It's just a flat day in the market. There was a little bit of sell-off we're going to talk about at Wall Street, but for the most part, it's kind of like a flat day. And then that's all we have this afternoon if you're going to continue trading. Once you've got your analysis out of the way, you understand where the volatility can be in the market, your next thing is to come to the security you're trading. So right now what we're going to look at is US 30. This is the Dow Jones. Okay, it's one of the most heavily traded index in the world with NASDAQ, and so some traders prefer to trade NASDAQ. It's more tech related. Some traders like Dow Jones. It's got different securities. It trades a completely different way, but you need to find personally which security suits your style and what's best for you. Okay, and now what we're going to do is we're going to start off on the daily. Okay, we can see right now this is a live candle. right now, we can see how the market is trading right now at this moment in time. I can see what happened like here in Wall Street, how it moved exactly. So if we want to just jump in trading right now, we absolutely can. Most traders just jump in the market right now. I wouldn't personally recommend that. Why? Because we don't know how it was trading the day before. We don't know how it was trading the week before. We don't know how it was trading the month before. We don't know any critical levels. All I can see is on the short time frame right now. I can find maybe some support levels, maybe some resistance, but I don't know anything else. So that's why a top-down analysis, you don't need to spend your entire day doing a top-down analysis. When you get really good at it, you should be spending maybe 3 to 5 minutes on one particular chart. I spend a little bit more time with you guys because I kind of break down more so you guys understand this. But normally when I'm doing a top down, 3 minutes, I'm done, and then I'm ready to go. So, but where can we start it? A lot of traders ask, Ron, should I start my top down on a monthly? Should I start it on a weekly? Should I start it on a daily? These are all good questions. So this all depends on what type of trader you are. So if I'm a scalper, do I really want to focus on monthly or weekly? Maybe I want to focus more on daily, 4 hour, hourly, then break it down. If I'm a swing trader, absolutely. I want to know where my monthly, weekly is, and then maybe go 4 hour daily, find trades in there. But weekends is more weekend analysis, higher time frames. That's where I do more weekly stuff. But right now, if I want to trade, like let's look at the time of the day right now. It's 1:12 p.m. Eastern. We have about almost less than 3 hours to go for the rest of New York Stock Exchange, which closes at 4 p.m. So we have about 2 to 3 good hours left still to trade a volume. So do I really want to do a top down on monthly, weekly right now? Maybe I just want to trade for the next hour, 90 minutes, 2 hours at the end of the day. So what I want to do is maybe just jump into the daily and do an analysis on the daily. Okay, so everybody following with me? We're now on the daily candlesticks. This is where it is an entire trading day. So this is how the range or the volume has been moving for quite some time with the Dow Jones. I can see this double bottom down here. I can see exactly point and time in date when it came down here. October 3rd, it bottomed out here at 28,550. It came back down, same wick, same area. Again, on October 13th, 2 weeks later, double bottom. That created this nice strong move. We came up to this kind of resistance right here, pulled back, held higher low, and we're breaking some critical levels. And since then, it's been getting rejected since that point. Got rejected, pull back down, come back up, rejected, come back up, go down, break that low, but still we're in an uptrend coming all the way from here. This is a higher low, 31,400 level. It's continuing to bounce up, but now we're coming up into this area of resistance over here. And that's why it's kind of getting where we're coming down, back up, coming down, back up. So we're trading in a daily range where it's accumulating for the next bigger move to come in the next week, months coming down the road. But now we actually can start to see more analysis where I'm not just looking on the 5 minutes where I saw where it opened today and London. Now I actually see a better picture. So now I can see to the left of the chart, and then I'm going to explain what are rejections on wicks and things like that. So you see that candles, they're all different shapes and sizes and colors. Some are full-bodied, some have thin bodies, some have wicks above us, and some have wicks below us. So when I break down the candlestick characteristics, we're going to start to learn more about what those are. But if we're just looking at a general area over here, in the past, we can see it's kind of getting like rejected right here. It's getting rejected right here. It's getting rejected over here, rejected over here. And if we bring this across, it's still getting rejected in this area. So you can see that it came up here, pushed down, came back again. It tried to get up there and break, but didn't. Came again last week, May 1st, start of the month. It tried. Nope, they pushed it down. So essentially, this is what is called a resistance zone. Okay, so you have resistance right here. And if you have multiple attempts at a resistance, then over time, resistance can form into supply. The more it gets rejected up there, then the more offers start to populate in the market. So over time, an area of resistance, the more times it gets rejected up there, the more times it gets rejected up there, then it can form into an area of supply. So if we bring this across, again, we see when volume comes into this area, is it going to still continue to get pushed down in the market? And we can see starting of May, we had bearish day, bearish day, bearish day, break the support, we came down. That's where we closed on Thursday. And Friday last week, we had a big bullish candle, and this is where we are today. So when we break all this down on our top down, we're going to know better levels where we are. So we can say that this is a monthly supply area because we tested up here, start of the new year, January, rejected. We came back up here again, February, rejected. Came up here again, middle February, rejected. Came up here again, it was kind of like a lower high in April. We came last week again up here and got rejected. But every time it's pushing down, what's going on below us? Are we breaking structure below us? So when it came down here, that was the previous low and it broke. So it did create a new lower low in the market. Now we're pulling back up as of Friday, and it might continue push down. If the market like breaks this low, we're going to continue to come down and transact down. What we have to do is find where our next support areas are, and we'll do all of that. So right now, what we need to do is focus more on our weekly outlook. Okay, so we know coming up here, start of May, and May is a very important candle. This is May 1st. This is the start, even if you're a monthly trader, this is the start of a brand new monthly candle. We only get 12 monthly candles in a year. This is a very important candle for investors, for swing traders. They're not looking to scalp 5-minute candles. They might be looking to take a monthly position and hold this thing for 6 months, 1 year, 2 years, 3 years. What happens if they're shorting the market? They're getting in here, May supply. They're shorting the market. They've got maybe their stop loss at all-time high, and they're taking this thing down, like monthly, 1 month, 2 months, 3 months. What happens if it was a 4-month pull, and then this is a pullback, and we're continuing to go down on monthly candles and break down here? Those monthly traders could be looking for maybe a short position to hold for the next year, 2 years. Who knows what the markets are going to do? Maybe they're situating themselves for a possible shorting the market on a higher time frame. Those are investors. Those are long traders. Okay, they're not scalpers, but this is a very important candle. It's the start of a new month. And last week, what happened? These are daily candles. It pushed down, okay, broke, came up, lower high, pushed down, made a new low, come back here and close. We still have this support over here. Next candle came up again, 50%. Okay, we're going to talk about this as well when we get more into the candlesticks. 50% retracements. It came up bullish, 50% of this supply in this daily candle, and got rejected, and we pushed down and we closed below the previous low. That's what creates a trend in the market. Lower lows, lower highs, lower lows, lower highs. Downtrend. The opposite is when we have higher highs, higher lows. Higher highs, we're looking for a new higher high, a higher low. Wasn't there? That's why the market is pushing down. And then we continue to bottom out. So this is now where we came down as of Thursday, and we came up and we closed, and Friday was this big bullish ignited engulfing candle, come all the way back up to here, and now we're figuring out where we are today. So now I understand that last week, starting Monday, was a bearish day. Monday, Tuesday, Wednesday, Thursday, bearish week. Friday was maybe a pullback on the end of the week, Friday. And last week, if you remember, we had a volatile week. We had NFP on Friday, and Wednesday we had FOMC. So you can understand how the market was moving on those particular days and why it recovered on NFP if you do follow numbers of unemployment and things like that. So we had a nice big bullish day on Friday, and then here's today. So we close and open. Okay, so before we do anything, I want everyone to understand a candlestick. How many of you guys are getting really good with interpreting what candlesticks are? Okay, these are Japanese candlesticks. They're on most of your trading charts. Okay, I know we have different type of price action. We've got Renko, we've got bar charts, we've got ticks charts, we've got all types of Heikin-Ashi, all types of price action. These are traditional Japanese old school candlesticks. Nothing fancy about these things, but these things have been on our charts for 200 plus years. Okay, so do we all understand that These are daily candles. If I didn't tell you that they were daily candles and I told you guys we were looking at 5-minute candles, would you guys know the difference? I'm asking a serious question here, guys. If I took this watermark away and you had no idea that I was on a daily and I told you guys these were 5-minute candles, would you guys know the difference? Joel, I hope not. Luke, yeah. So nothing would change, guys, okay? Let's put this in our head right now that all candlesticks have the same characteristics, okay? Because later on, you're going to decide what type of trader you really want to be. Because if you understand this concept, you can pick what type of trader you want to be. If you want to scalp the 1 minute, go for it. If you want to be a scalper on the 5 minutes, you can absolutely do it. If you understand these concepts and you say, Ron, scalping is too fast for me, I want to be a swing trader, I want to be an intraday trader, we will focus the same concepts, but we'll look at the 30-minute candles. We'll look at the 1 hour. We won't focus on 1 or 5-minute candles because you need to understand that it doesn't matter what time frame the candle is. You need to understand that we have to have an open, high, low, close. Okay, do we understand these concepts now? Open, high, low, close. OHLC. What that means is bodies of candles close and open side by side or with gaps in the market. Okay, so over here we had this bullish candle right here. Let me start with over here. This bearish candle. Okay, so bearish candles move down. We open right here. Okay, so it opened. What happened with this candle? Okay, so it opened right here and there was initial buyers as soon as this candle opened. Okay, so it opened right here and it came up. It was green. And what happened? It got rejected here. Okay, that was the high of the candle and it got rejected. Then after that, when it got rejected, there was offers in the market, resistance, and it pushed the volume red coming down where it opened, it broke the open and continued to push down. Next target is to test the previous low of the previous bar, right? So we're coming down here, and normally when we get to this area, there's going to be some type of reaction here in the market. There could be a level of bids coming in. We have to judge when it gets down here what the volume is like when it gets down here, because if it breaks, it's going to make a new low in the market. We don't know how low it's going to go until it goes all the way down there, and that's what that wick represents. So that candle, this is now the range of the candle. If you want to know the absolute range, we can look at the high right up here, the high. Okay, do we all understand that this is the high? 33,642, the high wick. That represents the high of this bar. Okay, this bar. This bar can be a daily candle. That's the high of that day. This could be a 5-minute candle. That is the high of that 5-minute time frame. Okay, very simple. If this was a 1-minute candle, 60 seconds, it opened, it made the high in that 1 minute, it got rejected, it came all the way down here within that 60 seconds, that same minute, we made a low down here, but this is not where it closed. This was the low. When it made a low, there was bids down there, so they wanted to get in. Bids took it right back up, and this was the close. Okay, so we have the open, the high, the low, and the close. And every single candlestick has these same common characteristics. Some have no wicks, some have larger wicks, and those are all the different type of candlesticks that we're going to talk about. But before we talk about any specific candlesticks, like a bullish engulfing or a hammer or things like that, you need to understand this concept. If we don't understand this, we're not going to continue to learn, okay? So this is as basic as it gets. I'm trying to keep this as simple for everybody as possible so we all understand this. Does everybody understand this concept of open, high, low, close? Because I know there's going to be somebody that's confused. And if you're confused, don't be shy. Say something now so we can correct this and then we can move forward. So if we all got this, if we're all on the same page, then we can continue learning. But this is a bearish candle, okay? So remember, we have green candles in the market. These are bullish candles, and they do the opposite, okay? So when we come down here, like if I'm following this volume, what happened here in this time frame? We opened, the buyers brought it up, but we have a lot of supply coming down from our previous bar. So it's a lower high. the supply pushes down, there's enough momentum to break the previous low of that candle, and we pushed for a new lower low down in here, came down there, but that was the low because it was represented by a rejection wick where we picked up bids and we closed right here. So now we've got a bullish candle. Now look at how it's bullish. This opens now side by side. Remember here the continuation now. You know when I'm always looking for critical areas in the market, I like to look for body to bodies first before I look at wicks, because the bodies represent the critical volume in the market. The wick represents the low. It came down here, but when it came down here, it went right back up. This is where it closed. This is where the next candle opened. So this is critical. Does that make sense, guys? This is a very, very important area in the market. This is where a body closes. This is where the next one opens. Again, this can be a daily candle. At the end of the day, it closes. Then the next day it opens. This could be a 15-minute candle. In 15 minutes, when this candle opened, maybe the first couple minutes, it came up here. It came all the way down there near the close of the 15 minutes, and when it actually closed, it closed right here. This could be the open of a new 15-minute candle. And when it opened bullish side by side, and when it opened, it wasn't big and green like this. It opened, and it actually went down red a little bit. That's what created the low. Do you guys see that? It's a very short wick. It's not as long as this one. So what is that telling us? Anyone want to tell me what that is telling us? That short wick right there. Does anybody know like what can read what the market is telling us when it comes down here? It's a new low. Yep, that's right. But when we have a short wick, what is that telling us? No pressure. Good. Yes, Victoria, you got it. Victor, you got it. Okay, so what it is it initially opened red and came down for like the first minute, maybe first seconds of this. But when it came down, it came into right away where it got rejected. So there was probably a lot of bids in here. And also maybe the selling pressure is getting exhausted. Okay, so the previous candle is giving you a little bit of information, right? Remember, candlesticks tell us a story. They tell us what happened in the past, they tell us in the present, and we predict where they're going to move in the future. So when this candle came all the way down the previous candle, it got rejected and we came up and we closed. Why? Because there was bids. There's like if we look for a green liquidity pool, it could be in here. Okay, do you guys understand when I show like a green box, what that means? When I say, like I'm using a lot of big words, liquidity pool, but these are all common words that we all need to be understanding. Okay, we got to talk the language of price action. I want us to all be on the same language. So this is if we speak a different language, we're not going to understand each other. We need to all understand the language of price action. So this is showing me when this red volume came into here, there was bids in the market. Like see here on a book map, we can see when this move came down into here, it was red, but then there was a big wick that rejected. Why? Because it came in here and it picked up all these bids. That's why we got a rejection. So very similar, this type of concept. This red candle came all the way down here, but when it was near the low, the bids came in and closed it right here. So now when we're continuing, this is still a green liquidity pool because this is where we picked up all of the bids inside here, right? Do you guys understand that? This wick is where it came down, picked up all the bids, all the pending orders, okay? And this can be comprised of everything in here. You can have stop loss orders, you can have new buy stops and buy limits in the market. You can also have sell stops and sell limits going the opposite way. There could be more selling pressure that want to continue to push this down. But this is where all the pending orders got activated and it came up and closed right here. So if we ever come back down into here, we maybe have a high probability that it's going to pick up some bids. So this candle that initially opened came into here and picked up those bids really fast. See, it didn't come all the way down to here. It didn't break the previous low to continue to drive down. It was just a very, very short pullback. Very, very short. So it came down really quickly and continued with this current uptrend that started with this. Sometimes trends start with two bodies, two candles can start a move, can start a trend. So this one opened, and as we were coming up, what did we do? Okay, so what is this candle called? Bullish engulfing, correct. Yep. So this is the big daddy. Okay, the bullish engulfing is the big daddy candle. Okay, make sure you learn your basic candlesticks, your bullish and your bearish engulfing candlesticks. These are straightforward, very basic candlesticks. But when you understand what these represent and also take it a little further where they develop, okay? So this is when we do a top-down analysis. This is when things start to make more sense. Don't just look for a bullish engulfing candle to form anywhere in the market. It has to come with context. Where are these forming? It's better to have these on the lower time frame develop at a bigger demand area. Like if we have a 4-hour demand and our lower time frames are getting really oversold, then that's where we want to see those big buyers come in the market, because we want to be buying with these guys. So now this candle tells me, what does it tell me? What's going on in the market? Remember, we had sellers in our previous body. This one came down and completely came up and broke the high. Okay, so we broke the previous high. Okay, see here, broke the previous high. What's going to happen when you break a new high? You're going to create a new high in the market. And where does it go? This is up to me and you to identify. That's why when we're doing a top down, we have to find other resistance areas in the market where this volume could go to, because we don't know what will happen. So all I know is on this candle, when it came up, I know the high. Okay, so again, going through the motions. When this candle opened, it opened, small pullback. That's why we got a rejection, small wick. You can barely see it, higher low wick. We came up with lots of volume because it was kind of at an area of demand in the market. Came up, we broke the previous high. We made a high on our own candle. And then what happened when we got up there? It got rejected and we closed right here. So we've got the open, low, high, and close. Naturally, now when we close here, we're going to have a continuation. But sometimes this happens in the markets too now. We get gaps. Okay, so some traders ask me, Ron, when it closed right here, why are we not opening at this area? See where we closed? Exactly. If I put a red line there, we closed at 33,784.90. That's where we closed. Why did this candle gap down and open at 33,765? Okay, so you can see that there's a gap in the market. Remember, this is a daily candle, okay, daily. But we can get 1 minute and 5 minute candles that gap down as well, or gap up. So that's just with momentum of the market and where they open and close positions. But this one opened right here, and what happened when it opened? It was red. Okay, remember, it opened right here and it came down red, 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 and look at where we picked up right here, our higher low. Look at the context. Was this not this previous bar's high right here? Okay, 33642. If we located that high of that previous bar and look at the retest, it's coming all the way down exactly right here. So now what have we identified in the market? Okay, so you know when one move comes up there, what is this red line called? Right here. Okay, you know when we come up and we get rejected, what do we call this line, this area? What is this called? Starts with an R word. Let's go, guys. Come on. Lisa, resistance, Joshua, good. Guys on YouTube, come on, let's go. If you guys are just worried about am I buying or selling, I'm not doing that today. I'm here to give you guys some knowledge, some nuggets right here. If you guys are just looking for buy and sells, it's gonna you guys are not here for the right reason. Just go on YouTube, put in live forex trading, find somebody else that will teach you about live and buys and sells right now. This is dedicated to education. If you really want to take your trading to the next level and you don't understand this stuff, this is where you got to tap in and learn this stuff. Don't worry about if US 30 is in a buy right now. Okay, if you want to take you got to take some days out of the market to learn. If you don't, you're going to have difficulty and you're going to keep losing. So it's time where you kind of get focused and get your shit together, and let's learn this. Okay, so this came up, it got rejected. It's a resistance. Okay, is this now we've identified a level in the market? What we tell our snipers is this is a static level. Static meaning this line will always be a line. Okay, do we understand that concept? If I put this line here, it's always going to be a line down the road. The line is not going to change. The only thing that will change is the color of the line. Okay, so here I use it red to represent resistance, to represent sellers. I hope that is all pretty clear. Okay, so it came up here and got rejected. The first rejection is to show us that this is resistance, maybe showing that there's sellers in the market. So what I do now is, when volume now here, this is volume, the big green candle, when it closes above here, right? Now we have volume above. This is what causes an imbalance in the market. Okay, so guys, if I'm saying a lot of things and it's going over your head, don't worry, we're going to take our time with this, but we'll put it all together. Okay, so how many of you guys have heard of this word called like imbalance in the market? You're probably hearing a lot of traders talking about imbalances in the market and things like that. So if you don't understand what it means, just let's keep it simple. Okay, so what is an imbalance in the market? From above here, we have, where could it go? Okay, where would this market balance itself out? So we know that there was a lot of selling pressure coming back down over here. So I can see my previous high was right here. I'm going to place like a different type of color, a yellow line, so you see that. So from here, from the high all the way up to this volume, okay, it's kind of an imbalance where there was a lot of selling volume pushing the market down. So this gap from like right here up to there. How big of a gap is it? Okay, remember, this is a daily candle. So from here, if it retraces all the way back up there, it's 223 pips. That's a big, like, daily. These are daily candles. But this could be a 5-minute area we're looking for, and this would be maybe 22 pips. Completely different. But now, when we're breaking, we've got volume closing above. The next daily candle came and almost filled the entire balance. From here, it came up green, 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 all the way up to here. It was just a few points short of hitting up there. So we kind of have filled the imbalance. Okay, you know, when there was all red down here, we came up now with green volume and we've kind of filled that balance. Okay, so that's what's called like an imbalance fill or balancing out the market. So we've kind of balanced it out. But then when we got up there, there was continued selling pressure. Why? Because there's continued maybe supply in the market above us, like over here. There's continued, if you look at the higher trend, it's pushing down, pushing down, pushing down. We're counter trading. It's coming back up, but getting rejected there. Now, the next bar, this is what's important about this area. So this was resistance. Now, with the volume above, what we can do is flip the color. You know when Dave and I are flipping the red boxes to green boxes? Also your lines. You can flip this red line, flip it to green, because I didn't change the line. The line is still there. All I did was change the color, because what now happens is an area of resistance. If we have volume, green volume close above, this area of resistance can turn it momentarily into an area of support. Okay, it's kind of like your house. You start off with the foundation of your house, then to go to the next floor, you have a ceiling. That's kind of like your resistance. But if you go to the second floor and you're upstairs, guys, imagine yourself in your house and you go to the second floor, now that ceiling will become your support. It becomes your floor. And again, if you live in a 2-story home and you want to continue going upstairs where you sleep at night in your bedrooms, you got to go up one more ceiling. You got to break that resistance. Once you get up there, the ceiling becomes a support. It becomes your floor. If we break that, we're going to go down to our next support level. So that's what we're kind of doing here. We're kind of creating levels in the market. Okay. And then now, when the retracement, the pullback comes down, and look at what happens. It tests this exact high of this previous bar. And look at it again too. This candle over here. this candle used to be a red candle that came down. Exactly. So if I was to bring this and look more to the left of the chart, do you see how it lines up perfectly with this wick right there bouncing off? This wick came up and got rejected. Now with the volume above, we're coming down again to that white, to this line, and we're getting respected, and it's coming back up. Okay, so guys, are we all clear on this? Does this make sense? Okay, but I'm trying to go as slow as possible, but really making sure that you guys understand this. Okay, slow me down if you guys are not getting this. Say, Ron, slow down, hold up, go back. Okay, but this is, guys, this is really, really basic. Okay, so if you're struggling with these type of concepts, what I'm explaining, we need to go back to the basics. As much as I hate to say that to people, we have to learn the basics in order to continue to trade good in these markets, guys. But let's learn this. Okay, so you see how one specific area that was resistance now turned to support in the market. So remember, now we've just created support. More touches at this area and more, now then support could possibly turn into demand in the future. Okay, so it all takes one tap makes now a resistance of support. If we come back down again in this area and we get support and more and more and more support, later on it can turn into demand in the market. Okay, so what happened when we came down here? It came down, respected this previous high, and we got buyers to come in the market. So buyers came back in and bought because it came to a good area of support on a pullback. Buyers came in, the candle came right back up, and then now we have a few things that we can do here. We can either break where we opened. Remember, we opened here. So with that new volume coming in the market, first thing we're looking to do is break where we opened. And if we have enough momentum, our next goal is to come up to the previous high of the previous bar. Okay, and then once we get up here to this wick, a few things can happen. This is where we get those tweezer tops, that webinar I did earlier. So this green candle could have came all the way right up to this previous high and got rejected, and then it would have been an equal high rejection. That could have been the resistance right there. But this one is coming up with more volume. So when it comes up with more volume that it picked up from this big bullish candle, pulled back, but this area turned to good support. We had a good buyers come back in the market, and now we're breaking a critical resistance point over here where this body couldn't break above here, this body couldn't break above here, this body failed to break above here, and this one didn't even attempt. It came down red. So now we're really breaking through structure. Now to the left of the chart, all we have is these bodies to the left. So again, now where's our critical and our range? So number one, when we look for critical areas in the market, I look for bodies. Okay, that's to me is more of a critical area. We got a body, kind of body. These are gaps in the markets. But then next fill is to come from here up to those critical bodies. And what do? That green volume filled that imbalance. Okay, do you guys remember that word, imbalance? Now the market is starting to balance itself out. When it was pushing down, now slowly the green volume is coming back up, filling the void. It's balancing itself out. Then if it comes up and balances and continues with momentum, where are we going to go? We're going to aim for each one of these highs. And slowly we're taking out each one. We took out this high, that right there, that resistance point, we took it out. When it goes above there, where's it going to go? It's going to try and take out the next one. Okay, and then when we get up there, we broke it. And where did it go? The next one is all the way up there. And what happened? It came up like an equal high and then got rejected right up there. But it closed near the high. Okay, so these are other things that you got to follow with volume. A lot of traders don't follow the volume. They just look at a candle. Okay, you got to understand, put yourself in this candle. What happened? Walk through it. Okay, we closed strong on the previous one, small pullback, still closed with a lot of green volume. The next candle came back down, a healthy retracement. This candle didn't break any structure. It just came back down to test this area, picked up all that volume. That's good. Then we continued to break. We broke previous highs, filled with nice volume, and we couldn't create a new higher high in the market right up there. Okay, equal highs, those are what's called tweezer tops, and we came up there, but then retraced, but we still closed with a lot of green volume below us. So then the next candle, this is what happened. It gapped up. Okay, remember what I was saying? This is where we closed. Look at where the next candle opened. It opened green up here. Okay, it opened ignited. It opened green, bullish, and it blew right past the previous highs right here. It broke these highs, and where did it come up to? It created the new high in that upper supply area. Okay, where did I get this big red box from? Do you guys remember? Hopefully you guys do. But this was before we were even going to start our top-down analysis. Remember, that was that big monthly supply. Okay, so the daily candles came up there, but then look at in the supply. We've got other daily candles that got rejected there, rejected there, rejected there. So that was kind of an impulse break that continued the uptrend that made a new high. But when it came up here, guys, yeah, we're moving on US 30, it's moving bullish, but pushing down here, then what happened? So the candle with all of that bullish volume came into an upper area of supply where there was a lot of offers up here because it's higher time frame. This was a weekly monthly zone. So I'm not surprised that they pushed this big candle down. So it got rejected. And then when we came down, first area we're going to test is this previous wick. You know, when we look to see when it's coming down, what type of reaction will it have here? It broke down. Now where we closed, what happened here? Broke down. We came down, and that was the low of the bar. Okay, so we closed, that was the low, and we closed right there. So it's basically we're closing near the low. So the sellers are in control. They closed it near the low. We had a big massive rejection wick off of that higher time frame area of supply. So naturally, this is what can happen in the market is the next candle opens, and it might open with green buyers coming in the market, because then we got to test the supply. So they come in, this candle opened green, and when it came up, okay, what did it do? It came up to this high, which is lower than where we opened, and it's much lower than this previous high and this previous high. So the market now is creating its first lower high. And with that, now the selling pressure could control the market. Enter, and as soon as we break previous low, what could happen? Now we're filling the imbalance back down. So remember, this big green candle came up, came up, came up. Now the market is balancing itself out, coming back down. It's filling from here to here. This previous candle body that was support, resistance here, we turn it into support. We see when the volume comes down here, what's going to happen? When it came down, continuing to break, continue to push down, lower. Look how low it came down. Came all the way down to here. And when it came down there, it's coming close to that big area where the buyers are waiting in the market, down in here. It was actually a little higher. So they came in, closed it right here. At the end of that candle, came in with buyers. When we opened up, those buyers continued the momentum because they're buying. They're buying, 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 buying. There's the close, and they're continuing into the next candle. So the buyers are still in the market, but when they come up, you're coming up to supply. Supply offers, pushing down the market. So this is why sometimes too, guys, when you get caught going against the move of the market, you get caught because you're buying when the selling pressure is increasing. So you're buying into supply, and then when it gets rejected and continues to break the previous low and drop even further and drop down for a new low. Okay, and then we'll talk about the 50% rule and things like that. Okay, so this is a sorry guys, I took so long, but what I want you guys to understand, because I'm going to move forward, is do we all understand an open, high, low, and close of a candle? Okay. This is the most important thing out of everything that I just talked about. Do we all understand that open, high, low, close? Very important. That's why you're going to see all different types of candles with different type of bodies. Some have long wicks, some have low wicks, and the volume in the candle teaches you a lot. Like here, these spin top candles, these are what are called indecision in the market. Okay, 50-50 coin flips. Okay, to keep it, if you want to know the real term of these candles, they're called spin tops. Some are called doji if they're smaller with small volume. But what we're looking here is, okay, so this candle opened, okay, opened, came down bearish, came up bullish, and closed right here. So it essentially, where it opened, it closed in the same area with buyers in control at one point. Sellers pushed it down, and the buyers brought it right back up. Same here, where it's like a tug of war, 50-50. Buyers bring it up, sellers bring it down, buyers bring it back up. We close essentially where we opened. So this is indecision in the market. The buyers don't have momentum, the sellers don't have momentum. It's a pause in the market. So when we find this, it's kind of where the market is cooling off. This is not an area that ideal for trading. Okay, this is where the market is just, again, it's accumulating. It's in that zone where it's picking up bids, picking up offers. It's kind of, they follow big moves in the market. Here you see this big green candle, 4 green candles, 1, 2, 3, 4, and then the market kind of catches its breath, and that's what we call, we'll save for another time, is what like consolidation is in the market, where you get also flag patterns. So you guys have heard of that, bull flags. You probably have heard what a bullish flag is, but we're going to explain more what is going on in there, what's going on with the liquidity, to make you guys understand. It's not just identifying a flag and say, hey, that's a bull flag. I know that this has a higher probability of breaking out to the upside, but it's better to understand what's going on in there. Once you understand the behind the scenes and you know what's going on in here, you're going to become that much better of a trader, because then you're going to know fake outs, you're going to know why there's liquidity grabs, you're going to know why there's stop hunts. These things, then once you take your trading to the next level, you're going to start to really understand what's going on in down here. And when you understand all of those bigger terms, stop hunts, liquidity fakes, fake outs, then you will be able to take your trading to the next level by being patient and disciplined and watching the moves. Okay, I promise you guys, you will get much better in your trading when you take more time. But let's move forward. Okay, so open, high, low, close should be very basic understanding for everyone. If you don't understand the basics of an open, high, low, close on a bearish candle or a bullish candle, we have some work to do, guys. Okay, let's be honest, let's be real with each other, let's not BS each other. If you are at the point where you're having difficulty understanding what wicks are of candles, what the bodies represent, let's go back to a demo. Let's not put any more live money in the markets, and let's learn how to do this properly, so that when you are ready to trade, then you can actually make some money. Let's be honest with each other. If you don't understand these, don't be hitting a buy and sell button when you have no idea what's going on here. Okay, this is simple basics of a price action candle. Okay, and I'm surprised how many traders lack this type of knowledge. Okay, and guys, we have tons of courses and everything breaking individual candles down in our program, but I want to do this live with you guys so you guys can ask questions as we're doing this. I saw someone said, ADS, I don't unfortunately understand most things from what you've explained. No problem, ADZ. If you don't understand what I'm talking about, then this proves to me that you've got a lot to learn. Okay, and don't take that as a negative. I'm not saying that to be negative, but I'm trying to honestly help you here, that if we don't understand these type of concepts, I'm telling you for real that we need to learn these basic concepts so that you can better your trading. If this is new to you, we've got some work to do. Okay. Leslie, that would be like predicting the future now. Don't you think the markets are not? No, I'm not. We're not predicting the future. What we're trying to do is we're trying to study the price action, historical. We know where it's been in the past. We can see that. We know where it is currently in the present, and with types of understanding the knowledge of how the markets work and more in depth, then we can help maybe predict where price action is going to go with a higher probability, as opposed to just guessing. But no, we're not predicting the future. No trader can predict the future. We don't know what's going to happen in the future, but that's what trading is. It's trying to predict moves with higher probability. Okay, that's where some traders are just guessing. They don't know a support level, they don't have a resistance level, they have no understanding. They're just hitting a buy and sell button. Those guys are basically just guessing and hoping for the best. But we actually go through the analysis and help predict with a higher probability of where it's going to go. But nothing is guaranteed. Absolutely nothing. I agree with you. But it's better to do a thorough analysis so that you're more informed. So when you're buying and selling, you're more confident with your decisions. Okay, so let's move forward. I'm going to go to a brand new chart now, okay? We're going to start off, okay? So that's all I wanted to explain to you was open, high, low, close. Now let's go for a thorough top-down analysis, okay? So starting on the daily. So number one, what I do, and you don't have to do this, you do whatever you like to do, but when I start to trade, like if I'm going to trade this afternoon and I'm just jumping in the markets right now, I want to know my high and low of the day. Remember what I was talking about? Open, high, low, close. I want to know what is today's daily high. So I do a purple line up here. No, I'm not selling my program right now. I'm trying to teach you guys live. Stop worrying about programs right now. This is the thing. I'm teaching live right now. Live. All you got to do is tap in right now. Hit the like button. No, I'm not selling you nothing. I'm not telling you about a program right now. But I will inform you that if you want all of these individual things, we do have these can save you time. Because I'm not going to be on here on YouTube every single day explaining all this. So this is free education, guys. I'm not here selling you nothing, but this is where you lose focus. You're just worried about what I'm selling. I'm not selling you nothing. I just explained to you guys everything what's going on in here, okay? Let's not focus on programs, guys. Focus on this. This is where, you know, you guys get off topic and you're not, see, I can tell that a lot of people are not focused. That's why you're going to struggle as a trader. I don't struggle as a trader. I'll be honest with you guys. I'm not struggling as a trader. I do very well as a trader, but I'm trying to take time out of my day. This is my prime time where I do a lot of my personal trading, and I'm taking time out of the day to be on YouTube with you guys for free, not selling you anything, to give you a proper education. But everyone's just worried about what he's selling. I'm not selling you anything. Whatever. Take it what you want, and then maybe we'll do this tomorrow with the Zoom guys. Okay, so we have our high and low of the day. Correct. Now, what happened today and what has been the moves of the prior market, okay? We see, I talked about this, start of May, Monday, last week. We had a bearish day. If we follow what we just talked about, the next day was a pullback with a lower high, broke the previous low wick. We came down and we broke the low of April 28 with a new low in the market. So that's telling me sellers are in control. And when it came down here, you got to understand we're coming to support levels. So does this wick surprise me that it came back up? No, because we're coming into the belly over here of demand. I haven't even talked to you guys about 50% retracements, and I'll save that for another day because I see that it might go over some heads over here. So we got to keep it basic. Came down, we created a support level, came back up. Next day, we opened bullish, coming up to test approximately 50% of the belly of this candle, holding, continuing, pushing down, continuing with this downtrend. And where do we close on Wednesday? FOMC right near the low. And then what happened in after hours? They gapped it down. We came back up green, approximately 50% of the belly of the bearish candle. And where do we push down? We broke the low and we came down to a new low. So we have a new weekly low in the market. Okay, so I'm going to identify this with a yellow line now. I only use purple lines for my high and low. Now let's go through the motions. What happened on this day? Thursday of last week. We came down here, 32,914. What happened when we came down here? There was buyers that brought it right here. Now we've got continuations. Okay, so these are like critical areas in the market. So what I do is I place a yellow line at this critical daily level. And then when we're coming up, again, let's go through the motions. Where could we come up to? We're filling the imbalance. Where can we fill? Up to the gap, up to here, and those critical bodies. Did we fill that gap? You can have a yellow line here, and this is where we're scalping. We're kind of scalping all of this volume coming up here. When it comes up to this area, it's going to make a reaction. It might get pushed down, but we came all the way up, and where did we move? We moved above Thursday's high, pushing right back up. Where did we go? We came all the way up to here and pushed down. So this wick pushed down. We still have volume. So we still have to respect the sellers that started pushing down, okay? And now we came up with a big bullish candle, but here's today's candle, okay? So we opened. How do we open? Friday closed. They gapped it up right above here. And we continued to push for the high Okay, so if we ever do come and trade back inside here, we came to low, coming back up. If we do come back to where we kind of closed and opened, we need to identify this area today, just in case we come and trade back in there. Okay, so if we come back up, we might test where we opened, 33,670. If we continue to fill, maybe we'll fill Friday's wick and our high today. And if we have a daily high breakout, where could we move? Again, we could possibly come up to this wick and maybe up to the bodies up there. So if we're looking at above here and above here. Now, what do I have above me here? I got an impulse rejection wick, an impulse rejection wick, a body, and a full body red candle where half of it is right inside here. So this is when I'm personally identifying my own supply areas. So I'm identifying, you know, when I put like a red box, this is what I do. I'm identifying my own supply. Okay, why? Why did I choose this area? Because over here, the market tried to pull back up in here and got rejected. Big red candle. Here's where we closed above. But then when we came back down, there was no buyers in here to take it back up. It closed below, and look at the retest. Came right up there. 50%. Half of that red candle is right around there. That's the heart of consolidation. That's the golden zone, and got rejected. And now we could be coming back up into here at some point this week. Maybe today, tomorrow, next week, who knows where. But I've already identified a zone in the market, and I'm going to keep that there. Now, if we're going to continue to come down bearish, we see we came up, got rejected, coming down. This volume now this afternoon might trade inside here. Maybe we come back to our low of the day. If we break, we might come down to this yellow line. If we break, we might come down to that yellow line and continue to push down. What type of daily candle is it? It's pretty much a flat daily candle. We opened, it came up, then New York we pushed down, and we found the bottom, and this is where we are now. So now I'm going to break it down from daily. Now you can go into an H4. You can go to 4-hour candlesticks and start to analyze. Now these are 4-hour candles. If you like to swing trade, you're just watching, again, your areas. Okay, so here you had a daily resistance where these 4-hour candles came up to that yellow line and rejected. This body of this candle, Friday 9 a.m. Wall Street, came broke and closed above. Now your next candle, we look for it to come back down to retest the yellow line. It didn't. Remember, this is a 4-hour candle. So all candles have the same characteristics. This one has a short wick. We were talking about that. Why does it have a short wick? Because it came into an area of demand, of bids in the market at this particular time. These are 4-hour candles. The same thing can be a 5-minute candle, but if you're a 4-hour trader, it did exactly what it did. It came down in here and broke. You can be in a buy, you place your stop loss below the structure, and now you're looking for that candle to fill the imbalance. Fill this wick and continue to break to a new level. If you're a 4-hour trader, remember, this is not a 5-minute candle. This candle has approximately 220 pips on it. Okay, so that could be your trade for the day in 4 hours. You could be still holding. If you're using this area as demand, now, if I'm a 4-hour trader, I see that this big red candle is coming right back down, maybe to transact inside here. So that could be a 4-hour demand. We can bring that across on our charting watch right now. I don't normally go to 4 hours, but if I wanted to, I've already identified my 4-hour block. Okay. And now, when we go into 1 hour, what we're going to do is now we're going to break down these 4-hour candles into individual 60-minute candles. Here we are. So here's the 1 hour trading, double top, M pattern, okay? Why? Because we're coming up into that daily supply area. What time of day now? Where did these big transactions happen? Friday, remember we were doing Friday? It was a continued buys. Okay, and then we pulled back into Sunday, Monday. What happened in London? London is another big session. We had banks closed today in London, but it was still bullish, making higher highs. Okay, look at every hourly candle, making a higher high, higher low, higher high. But eventually, it's going to come up and create patterns. So this is where we look for double tops, M patterns with a little bit of bearish divergence. So now when you're implementing more things, confluence, into your trading, then maybe you're going to understand that maybe this is a good area I should be shorting the market instead of buying up here. Maybe I short, I place my stop loss in the supply, and I push it down with the market. Now what are we doing? Okay, so we had the big drop right here. When was this? Wall Street, 9 a.m. There's the hourly drop. So if I'm following now the last few hours, now I know exactly how the market is moving. London, we were coming up. Here's our London trend line, right? Respecting all this. And then what happened in New York, Wall Street? Flash crash. Look at one candle. Okay, see this? This is 1 hour. It just engulfed 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours, 8 hours, 9 hours of trading. Do you see how fast one red candle can take out 9 hours of volume? Because this is all light volume. You know the push from the Asian session in London? It's all on light volume. So when New York comes in the market on heavy volume, it can easily take all that out. And what it did was it took it out. Where did we close? We closed right here. Next hour, we push back up. So now I start to use white lines now to focus on my hourly levels because I'm going to scalp inside. So that's like a white line for my hourly high. I color code everything. I color code from the purple. I know it's my high of the day. Other yellow lines are my critical dailies, and then now I can find hourly resistance. So at 10 a.m. we opened, we came up, still lots of selling pressure pushing down from 50% of the big Wall Street volume. Where is our Wall Street volume? I can already draw a 50% box. Half of it is approximately right here. Okay, so we've figured where our Wall Street supply is, half of that. Okay, and we continued. Look at the market is continuing to break down, guys. Look at it, Bookmap continuing to break down. Okay, it's been sells all day today. Now we're selling down into all of this demand. Okay, so look at what we're breaking down now. Look at where we're trading into. Okay, Sean, did you catch that drop? Nice. Look at it breaking down, guys. Okay, so see all of the rejection wicks? Here we go, breaking down, guys, breaking down, selling. Okay, the market is breaking down. Where could we drop now to? 33,500. I'm not picking that number out of my hat, guys. Okay, look at this wick right here. See that hourly wick? Came down, back up. Look at it bleeding, guys. Look at Bookmap. Just they accumulated, they sucked in all the bids, and look at this. Okay, beautiful sell in the market. It rotated up. Okay. Where do we have some supply? Remember the wicks, what we just taught you. Okay, the wicks. Okay, right there. There's our new zone. Okay, so this area is lower than here. So the supply is pushing down. Congratulations, you guys selling. Sean, 70 pips. Good job, bro. Okay, Joshua, the market is breaking down right now. Okay, why? Because look at how the pullback was the dead cat bounce today. Rejection, 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 rejection. Accumulation, okay, and now they're redistributing all of that nice selling pressure. Let's go to the 5 minutes, guys. I'll show you. Yeah, here it is. Okay, so see how we were pushing up. Okay, a little bit of a trend line, low volume. Okay, that's a low volume push up to the supply, and there's the dump. Okay, if I'm looking for buys, and normally I do this, okay, you guys know pretty much how I trade on Zoom. I look to see if any volume will kind of close above this supply to cause an imbalance in the market. And when I'm scalping, I could be scalping up to the white line, the hourly, like here. This green candle, how it came right up to that white line and pushed down. I measure the move. If I'm going to take that scalp, I'm measuring it up to the white line. Could be 17 pips imbalance. 17, okay? Minus 2 pip spread, minus some slippage. If you have good executions with your broker, you can maybe net 10, 15 pips. But if it comes above, breaks that hourly, we could be filling up more imbalance to up here. But when I'm trading, see what I do with my lines? Like I'm looking to fill on 5-minute bodies, like up to there. This was a body to body. So sometimes when I'm looking here, you know, when you guys see me with a lot of red lines on my chart, you're asking me, Ron, what are you doing? That's exactly what I'm doing. So you see that hourly white line? Are we surprised that it just came down there and tapped that white line and going up? I'm not. Are you guys surprised? That's why you can have a take profit right at that white line, 33,500. Told you guys that before it even got down there. Okay, that's why you want to understand these levels. Why did I choose that white line there? It's not because we were guessing. You look at the hourly analysis right here. You see in the past. Exactly, time and date, Friday, May 5th at 11 a.m. It was a red candle. It came down and bounced right there. Then the next hour, it came down a little lower and created, look at where it came down to, right down there where we have all those wicks. So this is now, if you're looking for an hourly demand in the market, it's right here. That's a red zone. Bring this across and make it a green zone. You've now found your hourly liquidity pool in the market. Okay, but when it came down, it's making a higher low. Why? Because Bookmap is showing us that the bids are going to come in. That was a huge drop. Okay, that's a massive drop. I don't know if you guys understand how big that candle is in 5 minutes. Okay, from the full range, from the top wick to the bottom wick, that candle, guys, alone is 125 pips. Okay, that's 1,250 points. 125 pip candle. Okay, so when it came down to the hourly support, there's going to be hourly buyers who are bidding that up. So am I surprised that it's got this wick? No. Most of you guys should not be surprised about this. So that's why sometimes when we're scalping, I'm closing my trades where I have it coming down to these specific areas, because I know it's coming into a demand pool. There could be a ton of bids waiting to get triggered in here, and sometimes it could get triggered and next candle's green and it's a bullish engulfing candle coming right through here. Okay, if it's a certain time of day and there's been a lot of accumulation and it's maybe very completely oversold. It's not. Like, look at RSI, we still have a long way. We're not even in any oversold territory. This thing could just pull back and continue to drop today. So, but we've identified some levels. So over here on the 5 minutes, we got our levels. Okay, now you see how it kind of came all the way down there to that. Let's follow this volume. Came all the way down to this hourly, broke a little bit, came. How did we open and close? Remember, we just talked about this. Side by side, we closed. What happened on the open? Assume it's going to open red to come down with a little bit of volume. But what happened? We made a higher low. So that's the low of this candle. Exactly at this time, at 2:10 p.m. Eastern. That's the low. Now we're coming up. Where are we coming up to? So when you don't know, how about we look at half, 50%, okay? And look at structure over here. Do you guys know what a pivot is in the market? Are you guys familiar with this term, pivot? Don't be shy if you don't know what it is, okay? No problem. But pivots. Do you guys play sports? Have you guys ever played basketball? Do you guys know what a pivot is in basketball? Nobody plays basketball here. Turn around on one foot, Lisa. Yeah, where you stabilize your foot. Okay, I lost my dribble. I'm holding the ball now. So all I have is my pivot. I can just pivot with one foot. If I move, I'm traveling. Okay, so like the market now, it's making, where it was coming down, kind of made its pivot. Okay, turning point. Exactly, Dan. So it's a turning point in the market where we were coming down. See this big bullish engulfing candle form at this support? We pivoted back up. So this pivot will play a critical time in the market. You see in the past how it was support, and now this red line where it was green, now with the volume below, it might act as red resistance. And if I'm just eyeballing, okay, 50% of the volume of this candle from here to there, that's about half of it, okay? So when we identify half of the market, we want to kind of identify it with a red box. I'll show you why. How many of you guys are familiar with the Fibonacci? The Fibonacci tool for retracements. Yeah? So let's grab the Fibonacci and let's just let the Fibonacci do the work for us. Okay, we'll grab the Fibonacci tool. Remember how to place a Fibonacci from the high wick to the previous low, because we want to catch this retracement. So right there, I placed the Fibonacci from the high wick right there at 33595, and I've just plotted it to the bottom low wick at 33492. So now I want to catch this retracement. Okay, these numbers were plotted from the Fibonacci. Are we familiar with the 618 and the psychological 0.5 and the 382? This is what's called the golden zone. Okay, from here, 618, 0.5, 382. 0.5 is not a Fibonacci sequence number. It's just a psychological midpoint. But you see the retracement came approximately right up to the golden line and got rejected. And about 50% of that volume still in the base of the candle. So you can see a lot of selling pressure, but now the retracement, it's like a magnet. It wants to come in and test half of the body right here, the volume. If it gets rejected, like let's say it comes up here and gets rejected and we push back down, then we know that this volume is still a lot of supply above us coming down. So they're absorbing this pullback. You know, we can watch it live here too. So you know when you get caught in a counter trade, you buy, and all of a sudden you buy into supply, then it pushes you down, and then you get caught in drawdown and you close your trade, and then all of a sudden it's selling down here. You're doing what the market wants you to do. They want you to buy. They're kind of enticing you. They're kind of trapping you to buy so that you're buying into supply. They can absorb you, and then they're going to push it down with more selling pressure. That's not always the case. Now what we're watching for is to see maybe we can look for a potential buy above here. But what we need to look for is, can the selling pressure, the volume, break more than half of this candle and close above, so that maybe now this zone we can kind of flip it green, and maybe this will develop into an area where it will pick up bids in the market, and now we're above the 618. So if it ever pulls back, we maybe can have high probability with momentum that we're going to continue to fill and take out the upper half of this candle. So when we're looking at that, we kind of got to measure our move. If we come up and we start engulfing that red candle, we're up 25 pips. But then when we come up to here, we have to respect this upper red supply zone above us, because every time we came up here, it got rejected, rejected, rejected. And that's where we got that big red candle. But now we're coming up with good volume. If we continue to build, maybe we're going to build and break out of here. Okay, so we look at it as like levels. And also, if it gets rejected, maybe we form a double bottom, guys. Sorry for all of these lines, but I wanted to explain Fibonacci. That some traders, when you get really good at price action, you don't need to use the Fibonacci tool. It's great for beginners, but if you just want to trade with understanding, like see now, 50%, we're kind of breaking above it. So see, the volume was a very quick dip, got bought up real quick, lots of bids. This could be a huge momentum switch in the market now, but it could also fail, could also come back down. And if it comes back down, this is where we form double bottoms, double W's, because it comes down for another liquidity grab. Maybe this is not enough volume to take this move where it dropped down, coming back up. Let's say it gets rejected and we come back down. Maybe we come back down into this big green box of liquidity. Maybe we make a higher low, double bottom, then it gets that injection. And maybe then this afternoon we have enough pressure and all of a sudden Dow is making a nice bullish recovery at the end of the day. Okay, so right now what's going on is we're pushing, and watch where this thing's going to close. Okay, so this is why it's good to identify areas so we know, are we buying demand, are we selling into demand? That was a nice candle coming down, but if that was a 125 pip candle. If you're not rewarding yourself and you're getting greedy, look at what the market can do. It picks up a wick in demand and it's almost already retraced this entire candle. Like this pullback, guys, just this pullback from this wick to the high right now, this is a 80 pip pullback. Do you guys understand why scalping can be very lucrative if you know what you're doing? Now, if you don't want to trade 5-minute candles, some traders scalp 1-minute candles. I love trading 1-minute candles. Okay, look at the size of these things. You have an M top breakdown. There's the volume close, spin top drop. Okay, right here. If you are following 1-minute candles at this time at 206, we broke this entire zone. Look at the ignited bar. There's your 1-minute pivot. Remember that was holding us support? Now you're coming down. There's your big 1-minute candle drop. But even as a 1-minute trader, look at the RSI. It dipped down to 19, but into a big demand pool where you already located hourly resistance. So you could have kind of waited for this candle to come down, close as a strong bar, and then next one you buy. If you bought, where do we place stop losses? This is another question, how to place stop loss. So when you understand the volume, you know where to place your stop loss. So if you buy anywhere here on the 1-minute candle, maybe you want to place your stop loss below the previous low right there. It's kind of tight, but some traders will place it below the previous rejection. They want to be safe down there. Sometimes if you nail the right entries at the right zones, you're not even worried about a drawdown because you go straight into profit. Look at the 1-minute candles. Look at it right up here too, guys. Continuation. 1-minute candle closed above. Here's the retest. Came back down. Assume it's red. Came up. Break. Firecracker. Buy. Just these two last minutes right up here, you're in another 15 pips profit. Now we're building and breaking above 50%. Here we go. This could be an entire liquidity grab, a market maker move to take out all the pending orders down here this afternoon, shock the market. What caused that big move? It could be manipulation for all we know. But it came down there and now it's a V recovery, a sharp V recovery. Look at it. What comes down? 125 pips can go right back up 125 pips 5, 10, 15 minutes later. That's scalping, guys. That's why when you ask me, Ron, can you hold trades? Could you imagine that, guys? 125 pip trade and you're holding it. Now you're getting your stop loss or break even hit and you're scratching your head after 125 pips. Look at the bullish recovery, guys. Look at it. We're going to break above all these highs now. This is a massive move, guys. Massive. The market is very, very volatile, but if you know your levels, trading should be easy. Look at again what we just learned about, okay? Look at how short the pullbacks are and look how bullish the candles are, okay? We closed right here. There was the high into that supply. We push down, pullback, short pullback, get a wick. We break the high. Look at where we closed, right near the high, okay? So all of the volume is right near the high, side by side open. Look at it, short wick. That's our firecracker, guys, for Wednesday's webinar. I'm going to explain to you guys what are firecrackers. And now we're continuing to pop. Look at there. That's the previous high. Boom. Okay. That's a beautiful liquidity grab to the low. This was a stop hunt. This was a pure orchestrated stop hunt. They took out they swept the low and look at, we're taking out the highs. Unbelievable move. Okay. It doesn't get any more textbook than this, guys. So do you guys understand what happened? Some traders ask me, Ron, why didn't it keep selling? Because from our top-down analysis, remember that 4-hour demand box that we identified over here? Are we surprised? No. Look at where it came. We still have big volume. Okay, you got to respect your higher time frames, my friends. Don't neglect a top-down analysis. Your top-down analysis is your basis for everything, okay? Without a top-down analysis, you can consider yourself going in the markets not prepared, okay? Knowing your higher time frames will prepare you for any time frame you want to trade. I love trading 1-minute candles, but I would never just jump into the market scalping 1-minute candles if I haven't done my overall higher time frame analysis. So take 3, 5, 10 minutes out of your day to do a proper top-down analysis, set up your zones, and what you do is you wait for the volume to come to you. Don't force trades. If the market is very, very like a lot of indecision, then don't trade this. This is kind of like this time in the market. That's not a good volume to trade. The market is just consolidating, it's ranging. What we want to do is we want to catch a trend of a market or big moves in critical zones. Like when we're completely oversold in a big area of demand, then maybe we're going to take that move coming up. So we don't know what's going to happen up here because look at the high, previous high over here. This was today at 11 o'clock. I was on a one-on-one with a gentleman in our group at this time, and he picked up on this doji evening star pattern and shorted, like had the right analysis right below here because he read the market perfectly. Sold down here. We're coming back up from there, lower high. We came back down, couldn't break these lows. We came up big, and then look at that's just a pending stop hunt. Take out all the liquidity. They filled up their pockets, and now you can see that big V recovery where the buyers are in control. We're above the VWAP. Our bids are starting to accumulate. All we got to do is take out these offers above us, and we're going to start to work our way into this zone above us. But if we don't close above here, then what could happen is pullbacks. And then we're looking to pull back again. 50% of this volume of this candle. We've got to judge where it's going. Right now it's extremely bullish, guys. Lady Stone, you had a great Monday after all. Perfect. Okay, so guys, if you had a great day today trading, then take this momentum into tomorrow. Take this momentum with you into Wednesday. Okay, some days are really, really, really difficult to trade, and those are the days we need to avoid. Some days have really nice free-flowing volume, and you're making all the right reads in the market, and you're boosting your confidence. You're doing everything. Take these days Don't give back to the market. I see some of you guys just messaged me and you're up 11% today. You DM me, okay? I don't want to see your name, but if you're up 11% today, you need to please walk away from this market. Don't make me call you or come to your house. Get out of this market, okay? 11% are some people's monthly goals. If you made that in one day, this is where you got to learn discipline to get out of these markets. Learn this discipline, guys. Okay, so now we closed in this red range. So what I do is I kind of flip this area green to see if it's kind of going to hold as some demand in here. If we, again, go through the motions, guys. Okay, so 50% of this big bullish candle is right here. Okay, so there's our trend line, continue to come up. If we can hold 50%, maybe we're going to pick up bids in here. I'm also watching live liquidity. If we come back down to the VWAP, that's about 50% in here. Again, if it comes down, pick up a wick. We know it's picking up bids right now. And then we watch to see if we can come up with more volume and we break that high. If we can, maybe we'll target that white line. That's our hourly resistance above us. Okay, guys, so we're going to go for another half an hour. Is there any questions? Okay, so now we're going to watch the market here. Okay, so you see this big zone that we're trying to break above here. Yeah, no, you guys can rewatch this. It's live, so right after it's done, it's recorded. You guys have this video all day on YouTube. So I really wanted to do more education today. Do you guys find that helps? Okay, be honest with me. Guys in Zoom, I know we go through this every single day, but sometimes it's good for a little refresher. Guys on YouTube, maybe you have no idea. I've never done this with you guys. Where's Dave? Dave will be doing Tuesday, Wednesday, Thursday in the Zoom room for New York, and he's doing some other things. I feel like everybody is just worried about buy and sell signals and has no idea what's going on in the market. Okay, remember, we want to educate you. We want you to learn how to do this. Okay, so now what's going on in the market? See now how we came down red, okay, but now we're coming to 50%, the liquidity pool, okay, and came down to the prior trend line. It's respecting. Now we got bids forming in the market. You know, like this was a big move. This was an extremely big move. Maybe the market needs to cool off right now, okay? Maybe it needs to, you know, like I use this analogy, okay? If you go outside right now and you run, like you run hard, you sprint 100, 200 meters, okay? Most of us are old and we smoke too much weed, and after a little bit, we're going to start huffing and puffing, okay? If that's the case, look at the market. It made a big move, big move, and maybe now it's huffing and puffing. It needs to catch its breath in here, and maybe it will continue to the upside after it catches its breath. And then that's what creates a flag, or like an area of accumulation. Whatever you want to call this area. It's kind of like a pause in the market where now it's going to maybe catch its breath. It's going to accumulate. Like there's going to be some offers that bring it down, bids bringing it up, but then once it accumulates again, then it will go for the next leg in the market. If it doesn't hold here, then a potential break of 50% of this green candle, guess what's going to happen? Then the market will maybe come back down to test this candle. So if I'm looking to scalp, like sell below here, I'm already measuring the move. It's approximately 20 pips to come down to the previous open. If it comes down to that 50%, it's about 30, 35 pips. But what I'm waiting for is a break of structure. We need to push, break the trend line, close below 50% of this green candle, so that if we retest, it could be we're retesting the resistance or the supply. Then if it gets rejected, then the selling pressure will come down to test that previous open and maybe down into this green box. And when it comes down there, that could be bids again waiting to take it back up. That's how markets move. They move in an uptrend with higher highs and higher lows, and they also move in a downtrend with lower lows and lower highs. But sometimes markets move sideways, where we have to acknowledge what type of market we're trading. And this is where patience and discipline. You got to be very patient and disciplined on the markets. What do you guys want? Make it rain on GJ? You guys want me to do GJ? Yeah, if you guys want, I don't care. What do you guys want on GJ? Like a top-down analysis? I don't think like GJ for now, guys. Like this is a good time to be watching Dow, like right now, leading into power hour, guys, because this big V recovery could play a big role leading into power hour, guys. Okay, so big move. And do you guys see bullish divergence? How many of you guys understand what bullish divergence is? Okay, number one, it's not always guaranteed when you spot this, but where and when it's spotted and the context is the most important thing. So do you see how we were making lows like right down there? So if I keep my trend line consistent, okay, I know a lot of traders will put it down to the wick. That's not consistent, okay? Consistent is like over here. See here, if I kept it consistent with that wick, kept it consistent with those wicks, kept it consistent with these bodies, now this tells me a lot. So if I kept now my trend line on RSI consistent from this previous peak low, okay, coming up like this, okay, it shows me that as the market was making a low, a lower low, a lower low, a lower low, the strength was making a higher low, higher low, higher low, but we had that huge liquidity grab. So you see here where it kind of broke down and came right back up. It was quick. That was a couple minutes. It came in what? So you know that this move is a liquidity grab. That's a stop hunt specifically done by market makers to come down here and take all the lows out. They triggered all the pending orders down here. Every single order that was in the market here, they just took them out, okay? And who picked up that liquidity? The market. And the market now is reversing, okay? So that could have prepared you if you put all these pieces to this puzzle together. We had a 4-hour demand zone. We had this white line before this red candle even came down here. That was the hourly support. And when you see this flash crash come down here, and you're not in a sell, you don't need to get selling the low. You could follow this liquidity and be in a buy and take it up, and you understand that there was bullish divergence. This was a manipulated move in the market to deliberately take out all the pending orders, because now we got a 3-bar play, maybe breaking for the high. So this could have been a beautiful market structure manipulation move near the end of the day, orchestrated from our friends, our bankers. And they took out a lot of retail stops and every pending order in the market and stop losses. Now they got all the money, and now we're cooling off in this flag pattern that can continue to break out to the upside. If it closes below here, if you really are an aggressive scalper and you know what you're doing, you could be looking maybe for a short position down into here, okay? But it requires a little bit of experience. Okay, so guys, let's continue to watch what's going on with US 30. Okay, so we have, remember the highs, okay? So we broke out, there's a high, equal high, remember tweezer tops, okay? Don't get sucked in buying impulse candles, because sometimes you're gonna get sucked in. You're gonna buy, and look at what you're buying into. You're buying into a lot of offers up here, okay? Look at all the offers in the market. 33,725, 30. 33,720, 61 offers. 33,715, 13 offers. 33,710, 26 offers. 33,705, 25 offers. 33,700, psychological area, 24 offers. Okay, so in order to break through here, we got to accumulate more bids. This is where it's trading sideways. Are we surprised that we're trading sideways? No, we shouldn't be. Because now the market is cooling off. But every time it pulls down, make sure you're looking at the lows. Okay, so this candle came down, picked up higher low. We're pushing up, but we haven't broken new higher high. So remember, in order to continue uptrends, we got to break new highs. We came down on this candle, pull back, higher low. Now we got more volume. So we're going to try one more attempt to try and break here. Look at the ignited candle. Okay, so right here, we opened, popped. Okay, it's bullish. Quick. See what they did? Quick Look at equal, we didn't break above there, and then quick rejection. So let's see now, let's gauge 50% of this candle. This is what I like to do. Right there, I kind of eyeball it. Is it going to come down there? And how is it going to react right here? If it can't hold here, then it's going to come back and test the open. Now we're trading barcoding. Green, red, green, red. This is market indecision. Look at Bookmap. We're moving nowhere, just accumulating. Now you see we didn't hold there, so it's possibly going to come down. But it's in that zone in the flag. Do we really want to trade in here? Unless you're accumulating a position. But when every time it comes down, look, did it really break any structure? No, not yet. So it's a higher low. So the buyers are still bidding up. They're still holding it. So if this thing comes with some good momentum, guys, we could possibly have an impulse break above here. Maybe we impulse break, we close above this structure, and then we're shooting to take out that hourly high up here. Okay, now look at how the candle's coming back up. So it's a spin top. It came up, got rejected when it opened, came down. It broke 50%, but still holding above here. So it is essentially technically a higher low. We're coming back up, but this is where it's the fight between the sellers and the buyers. Now we watch how this candle body closes. There's 3.5 minutes. Remember, this is a 5-minute candle. Okay, that's a long time. That's 300 seconds. Okay, now we're coming back up, hammer candle. Now we're coming up. We're going to possibly have a punch, a break through here. And when it breaks, it creates a new high in the market. How high can it go? We look to the left, right over here. Do we not see like a wick right over here? I do, that wick. So when I'm measuring if there's going to be an impulse move from that red line to the red line, I measure from here to the next red line. That might be an additional not much, but 5.5 pips, okay? But that's what it will be to fill that possible range. If it can break up there, then our next high is right up here, okay? It tested. Yep, here we go. Yep, there it goes. Easy. Yeah, guys, see the pop? Okay, so we built, came right up to essentially that red line area right up here, okay? So we broke for the new high, kind of filled that imbalance up to there. If it continues, our next area to target is these bodies before it hits that hourly white line. So we did break out for the new higher high, but when it comes up there, there's a lot of offers, okay? Is this move getting tired? We got to see now, maybe where it closes. Okay, that was the impulse break. Okay, candles break out on impulse. Now you've got to watch where this candle, 2 more minutes, where and how is it going to close? You got to ask yourself, did it break for a new high? Yes, it did. So it's technically, it moved to create the continued higher high. When we came up there, we got rejected. Why? Because there's a lot of offers in the market. There's where it got pinned. So that big red bubble, when it came up there, it got pinned hard. So now they're taking it down. See how it's in a rejection candle coming down as a shooting star. This is not the best area to trade. That's why we say when it's barcoding, green, red, this is where you got to be patient as a trader. Did any volume close above here for continuation? No. Did it have the impulse candle breakout? Yes. That's where sometimes when I measure the zone, if it's up 5 pips, 10 pips, I know if it breaks out, that's how much you can get out of that trade. Also, if you're holding a buy from all the way down here, that could be your continuation move where you kind of close because now here comes a pullback. Again, if we come back down to 50% of this, let me get rid of this entire green box for you. Okay, so coming back down into here, I know it's boring now this time watching all this, but this is, you got to get patient as a trader. You got to learn. Sometimes you cannot be trading every single candle. You got to wait for the best volume to trade. So like sometimes if I'm looking now, if selling pressure closes it below here, maybe it might have some momentum to break down here and drop a little further. First drop will be right down to here. Next drop down into this green box. I measure that move. If that's something I'm interested in, then I know exactly if it does come down here. If I take that down to there, that's about 20 pips. Coming down to the green box is 30, 35, 40 plus if it breaks down. But what happened? Came down again to the trend line holding. This wick is higher than that wick. We're still above 50% of this candle. So we're still technically holding a little bit of support, but it's building. Now it might come back down. Now we're below the trend line. So this is where it gets boring in here. This is the the consolidation zone. This is where it might build now, like double tops and things like that. We moved up, back down. Maybe it's going to come back up, maybe get rejected a second time. Then that's going to be the big drop coming down there. Unless it continues to build on bids, and then we're going to follow this arrow. Okay, guys, so today was more education based. I want to do some of these sessions, okay, because I feel like some of you guys need this. You know, it's good for everybody. It's not anybody can hit buys and sell buttons in the markets, but if you learn something new today, hit that like button, and then maybe we can continue to learn more things. But today was just a basic intro to top-down analysis and just understanding the open, high, low, close of a candle, okay? And then we'll get into more individual based candlesticks. We'll talk about those. We'll talk more and more about how to locate and identify support and resistance areas, and then how those later on can develop into supply and demand zones. But this is just keeping it old school, just keeping things basics, guys. Just keeping it, you know, the way how you should learn as a trader. You know, this is this type of style doesn't have any fancy names, guys. If you ask me who taught me this, I basically taught myself this. So, you know, if you want me to tell you terms, is this ICT, is this SMC? I don't know. I don't really give a shit about those terms. All I care about is price action. Whatever you want to call these. Some people call this a mitigation zone. I'm seeing that now. A mitigation. When I look at mitigation, this is just an area where it's accumulating. It's picking up the bids, the stop hunts. Now it's fancy words using a mitigation zone. 20 years ago, this shit wasn't called mitigation zone. You know, I call this the trap. You know, if you want to go by the trap, call it the trap. Call it whatever you want. But now I see traders are coming up with a million different names for one concept, and then they're just selling different names to everybody. You know, fair value gap, FVG. It's just this. It's the imbalance in the markets where all of the demand is holding. So if it comes down here, obviously we're going to pick up bids. But without structure below us, we don't know what's going on. What's happening with these bids? Like down here, it picked up bids, but did you know this was stop hunts? This was a liquidity grab. There's more that you got to know what's going on in the market to understand this big move and this bull flag that's forming that's possibly going to pop out of here soon. That's why I find a lot of traders are getting too confused with different names of everything. Like it's not that it might be too much. You're learning smart money concepts, one theory. Then you're using ICT, another theory. Then you're learning another theory. Then you're learning another theory. It's like going to school and you're reading a million books, but you're not retaining any information. Just keep it simple. With what works for you, continue to study that. If SMC style works for you, study it and master it. If that other type of style, ICT, works, study it and master it so you know what you're talking about. Not just because you can talk fancy words. It's more to just fancy words. Understand what's going on with the volume in the market. Okay, like in here, do you guys know price action, what's happening in the market? This is the most important thing. Okay, so in here, where we see this pause in the market now, where it's green, red, all of an equal area, this is what's most important. What's going on in here? Don't worry about what the name is called of this zone. Okay, it's an old school bullish flag pattern. Okay, that's all it is. Okay, and bullish flag patterns have a high probability of continuing to go in the original rally of the market. So this is the pole of a flag, and this is the flag. So like I said, this pattern, not always guaranteed, has a high probability of continuing with an uptrend after it cools off and picks up its breath and accumulates more volume without breaking any critical structure. So that's what's happening in the market. That's why we see Bookmap is kind of paused in here, because it's just slowly accumulating, maybe going into power hour in the next 15 minutes. And then when we get into power hour, what could happen is there is a release of volume. This is either going to continue to the upside, or unfortunately, if you're in buys, it's going to break down in here and maybe continue down to this block. Okay, that's how the market is going to move in the next hour and 15 minutes. It will either continue to accumulate in this tight area that we've identified. It could also mean a break to the upside and continue, or it could mean it breaks down here and drops. It could also be false moves in the market too. We have to understand that this is not always a path where it's going to go. But what we have to understand is there could be a false break in the market coming down here, and then it comes back up, picks up that liquidity back in this zone, and then all of a sudden we're breaking out here. But there was a break moment, brief break of structure. We didn't get that retest to continue come down. Maybe they come down, pick up the last bit of pending orders, liquidity grab in here. They grab all that liquidity, and then we got to push to the upside. Same thing can go opposite. Okay, we can maybe have a false break to the high, and then they're pushing it down. Okay, so this could also happen where it's a false break to the high coming up here, and then all of a sudden it gets rejected and then does something like this, and then it breaks down here in power hour, and then we're having a little bit of a push down in the market. Okay, so our job as traders is to wait for the move. This requires patience and discipline. How long have we been consolidating in here for now? It's been 10, 20, 30 minutes. Is this a real good area to be scalping? Not really. Is there any direction in the market right now? Not really. Buyers are bringing it up, sellers are bringing it down. We're not really moving right now. So this is where you have to be patient and be disciplined. The big moves in the market have already been made. That big sell and then the big pivot back up. Now we're cooling off, catching its breath. You can see Bookmap. It's not really just in a nice range right now where there's some offers and there's some bids. We're right near the VWAP, so it's at a critical area here where we'll see going into power hour, the last move of the market, if we're going to continue to have a bullish move or bearish move. Guys, what do you guys think? Everybody, do you guys think we're going to have a bullish continuation into the close of the market? Or do you guys think they're going to fake the high and bring it back down? And maybe possibly we're going to sell off down in here. Bryce, you're in a small buy, so I hope bullish. Yeah, so we got it created that higher high. We have it, yeah, so it's a nice bullish hammer candle. Let's see if we can close above there in the next 2 minutes. Captain, hopefully bullish continuation. I hope so too. I hope so too for everybody. Let's see what happens here. Okay. I see a lot of you guys are all bullish. Yep. So remember what we need. Okay. We need a nice solid close above this zone. Okay. We've already done our job with a higher high wick. We established that, but we need to have good close of some good volume to build a bigger base up here. So that going into power hour, we can get more volume entering the market. Another good thing to look at is go to your hourly candles, okay, because we're going to get a new one in 11 minutes. Now, how have our hourly candles been moving? Look at this hourly candle. Okay, remember that huge liquidity grab right down to that hourly support? That's when we knew exactly it was going to come down to 33,500. Wasn't any guessing down there. So it came 50% beautiful from this zone, guys. Okay, from here to there, half of it, beautiful liquidity grab. I couldn't have orchestrated it better if I was a market maker. That was very well planned. And they came down here, and look at our candle now. Now we are a bullish pin bar on the hourly. If we close strong as a hammer, maybe we're going to continue move. So now, like going forward, you see this candle at 12 and 1 p.m. So if we're looking now, like recent hourly resistance in the market, maybe like right around here, this area could be possible hourly resistance. Now we're closing above. So if we ever pull back, now I know my new hourly support level, 33,610 area. Okay, so we'll watch how this closes. Look at what we're trying to take out. This hourly candle is trying to take out the volume of this body. It's 33,625. So this is another really important structural area in the market. So if we can get this hourly candle closing above this white line, closing near the high, maybe a small pullback in power hour, and then we're continuing to take out this high. Yeah, we're bullish right now, new high, and look at these levels we can continue to push. So let's go back to the 5s and watch this close. Beautiful. Okay, so we got a nice strong close. Yeah, ignited bar at this demand. We made a new high. That's awesome. So maybe we're going to push up going forward into power hour, maybe up to that next hourly white line. But now we might have to watch for pullbacks. Okay, where can pullbacks happen? Maybe back in this consolidated area. Okay, but we created a new higher high. Let's see if we could create some higher lows, get more volume closing above here into power hour, and maybe we're going to continue with bullish momentum. And I hope everybody, we can continue with bullish momentum. And then if you're in any buys, you continue bringing your trailing stop loss at these levels now. Okay, so we have 4 more minutes. Four more minutes to go of the close of this candle, but we actually have 9 more minutes to go into 3 p.m. Then I can stay with you guys like 5 minutes after that, and we'll watch 3 p.m. But be very careful, okay? On a Monday power hour, they could be setting themselves up for end of day close and things like that. If you're not familiar with trading power hour, be careful. It's very volatile. AJ, no worries, bro. Okay, do you guys have any questions that we talked about? Anything, guys? So I want us to be all on the same page. Are we all good with understanding a quick little top-down analysis, why it's important, understanding that it doesn't matter what candlestick we're looking at, they all have the same characteristics. So we can be looking at daily candles, 4-hour candles. 4-hour candles have the same resistance. You know, if you want to swing trade, you learn everything on a basic candle and you can adapt it to whatever style you like. All candles have open, high, low, close. Look at this. Beautiful pullback, 50%. Now we got a nice bullish candle breaking out. Okay, so some new high pips. Let's see if it can target that hourly white line. And when it taps up there, that's like a bingo. You got to know that when it comes up there, you got to make a move up there, because it could come up there, catch a wick, and go right back down if that's the case. Looking to the left of the chart, we still have some 5-minute volume before it can get up there. So it popped, but got rejected. So hard rejection is because we're going into power hour. This is volatility, okay? So you got to understand, power hour gets very, very volatile, okay? This thing could just drop a big red candle coming down here. I want you, like, you guys got to be prepared for that. If you guys want to trade power hour, you got to expect it's like basically a new open market. You know, when we trade London session, we trade Wall Street, sometimes like a red folder. It's very volatile. There could be a quick liquidity grab, so you got to be very careful with this. Okay, and then at the end of the day, have fun with trading. Number 1 is don't over leverage. Okay, you want to take stress out of trading. If you're over leveraging and you're panicking every time you're taking a trade, 100% you're probably over trading, over leveraging. So when you get into a trade, you shouldn't be risking more than 1% of your account maximum. Okay, some of you guys are doing way too much risk, and then you guys are panicking on every single pullback. If you give it enough room to breathe and you're not risking too much, then you can really learn how the market is developing and it's picking up liquidity, and it may continue going in your uptrend where you believe it's going to go. But volume needs to pull back in order to pick up healthy volume to continue to go. We've tried multiple times up here, 1, 2, 3, 4, 5, 6 times to break out of here. So naturally the market wants to break out, but we've got a lot of offers above us. So it needs to come back down in a healthy way to pick up these pending bids without breaking major structure. So every time we're pulling back, it is creating a higher low. So I know it sucks watching a red candle come down, but this is part of trading. You need to understand what it's doing. Once you maybe understand what it's doing, maybe it might help you to hold the trade longer, as long as you're not over risking your accounts. Because once it builds and builds and builds, if you were holding this through here, then maybe your reward is when it starts to redistribute up here, and then you get rewarded for being patient and holding inside here. Welcome, Heath. Yeah, to me, MS, this would be like an order block that I've identified in the market. Why this block? Because this big red candle that came down, that was half of it at that time, okay, when it was red. Now, with this big green candle that came up, that's about half of it. So that's when I bring this across, that's an order block. I'm going to say that this is a bullish order block. So if the market ever comes back down into here, I'm going to assume it's going to bounce and maybe hopefully like a double bounce and then go right back up. So that's what I'm anticipating with that box in here. Okay, so see now how we have one more green candle, 255, again attempting to break above here. Okay, it might come again, impulse, get rejected, come back down. Maybe this might be a false candle, come back down, but we're leading into that power hour. So I'll stay with us till 305, guys, but we have not really broke any major structure. We're still in this bull flag. So let's see if we can get this continued nice buy above here. There's a lot of room for it to fill to the left of the chart here, but it's not always 100% going to happen. Okay, it came up here earlier today at 9:55 and 10 a.m. 10 a.m., 10:05 started this big trend pushing down. We rotated right back up at 11 o'clock. It got rejected. We came back again at 12. It got rejected. We came back up again at 1:45 and 2 p.m. What happened? We got rejected. That was that huge pending order down there where we picked up the liquidity. And now again, we're trying with this volume to break out of here. So hopefully going into power hour, we get that break. It will be a really nice move to the upside. We can minimum come up to this white line. And maybe if we break a little further, this could be a nice move to the upside, guys. Especially if you guys are still holding buys. From here to the white line, we're looking about 15, 20 pips. To the red line, 30. And up to that upper supply, 45, 50 pips up here for power hour. Okay, so we're going to close in 2.5 minutes. And then if we lose all of this structure and down here, this is where possibly the market could sell down, or if you don't feel comfortable selling down there, it could be another liquidity grab. The market could come down here, break, maybe a false break, come down, pick up a wick, and come right back up. Okay, so you do gotta follow volume 2 and see where it closes. Don't just like sell a red candle because you see a red candle. It might come down, but when it comes down, it might be picking up a wick at this body or right here, and then all of a sudden it's coming right back up because the pending orders are waiting to get triggered. So you got to be careful when you're going against the market. It's trying to break the 200 EMA. Yeah, that's another thing. So I don't use too many indicators on my chart. Normally what I use is a 9 EMA. So we're above the 9 EMA. It's this green line. It's right at the hourly white line. It's the 9 EMA. And I use a 200. Most of you guys use this. So we're right at the 200. So you guys know that the 200 is like a big cloud. It's holding. But if we start to get this golden crossover for power hour, this could be an extremely bullish move developing. Okay, there's the 9, there's the 200. There might be a pullback right at 3 o'clock. Come down, back down here, pick up. But if we have like a golden cross developing where the 9 crosses over the 200, this could be a really nice move to the upside. Okay, I also use like RSI2 to look for divergences. Anything above 50, we are in bullish territory, showing strength. We're right around 59, 60. So we have lots of room that we can push up to 70. Lots of room for it to go. So we'll watch this, guys. Here's the close in the next minute, 50 seconds. Okay, I hope for the sake of everybody, we do get a bullish move going into power hour. But could be a pullback to try and pick up liquidity, but if it breaks the structure, then it could sell off. So you got to be very careful. Okay, that's why if you're in buys, trailing stop losses, things like that. Okay, so let's go. Let's watch into the close. How we're going to close. Nice big body bullish candle. Again, we're building up here. Okay. Am I going to enter? Maybe I'm already in. Okay, so look at how we closed. Open bullish. Okay, so let's see. Is it going to flash red? Okay, it's holding. Okay, they gapped it up. Okay, look at the body. The gap up, small pullback. Okay, it's holding right at the 200. Okay, so now it's going to come down. Maybe test where it opened, right here. Okay, let's see if it can form a wick right here. No. So maybe it's going to 50%. Watch, flash crash. Let's see if it picks up a wick and goes up. If not, it's going to break and continue to drop. Yeah, that's a nice wick. Right at 50% right there. So it got a nice wick. Let's see now if they can bring this volume back up. Okay, no. So it came back down. If it can't hold, it's going to come down to these bodies right here. No, it's still holding higher low. Okay, let's follow this volume. Okay, this is the last candle I can stay with, guys, and I got to go grab my kids at school. But it's holding right here. Yep, beautiful. Now turned into a hammer candle. Now all we got to do is break this. No, see how volatile this is? That was a nice hammer candle. So now this is the volatility of power hour, guys. I'm telling you. Okay, so it came all the way back down to the 9 EMA. Probably took out a lot of stops for all of those buyers that took the impulse right at 3 o'clock. Now it's coming down. See if it holds here. We don't want to break this hourly white line. Okay, maybe it's coming down, picking up bids. This is the volatility of power hour. Very strong. Okay, but if it continues to accumulate, we're going to watch it pick up all these bids in here. But did you see, guys, how nice, how it flipped like a nice, beautiful hammer candle and then quickly got rejected? So now we're coming down. But in order to pick up bids, we watch in here. If not, it's going to break down, guys, and this could be a possible sell below structure below here. But it's still holding, coming down, coming back up. Not a good idea to trade right at 3 p.m. I told you guys, it's very, very volatile. You got to treat this as if it's a like London market open. You got to treat this as if it's New York. This is the last hour of the stock market. It's very, very volatile. Okay, so we got rejected at the 200 EMA. We got rejected up here, now pushing down. So when it comes down, we're right back in that consolidated box. We're right back in here. I know it's a big red candle and it scares a lot of people, but we're still right back in that area of consolidation. So have we really broke 50% of this candle? No. So maybe these bids are going to start to accumulate. We don't want to break the VWAP. Okay, so we're picking up a wick, picking up some bids. Did we break any structure? Not really. It was a scary red candle, came down, yes, I agree, but it picked up a higher low. Now we got to watch, can the buyers bring it right back up, or how's this body going to close? Remember, now we're coming up. Okay, we still have this big red body above us. This is what's called a hanging man candle. No, Thomas, I won't forget about my kids. You guys are important just like my kids too, guys. So, but I want to stay for the close of this candle. All I ask for SST, guys, is if you can help grow the channel with us, we do appreciate it. We'll try and get on here daily and give you guys as much nuggets as we can to help you guys. But all we ask in return is a like, okay? I'm not here selling a program. Okay, if you do want to take your education further, we do have all that, but I'm not doing that. We'll be on here daily with you guys. I want to start a series on YouTube with you guys, not sell you anything. But if you really want to further your education, we've got a ton of material. That's all I'm saying. But if you guys enjoy this, just a like button, subscribe. That's it. It's free to like. Okay, look now, guys, okay? Just this Bookmap is invaluable. I don't know if you guys understand how valuable like this information is that I have over here. I know a lot of you guys see bubbles, but this platform is invaluable. This can really help you as a trader if you really then, once you master candlesticks and you master price action, and then you take your advanced knowledge into the book and you understand what's going on in here, I can guarantee you your trading might turn from day, like it's going to be a complete transformation. Now you understand what's going on with the order flow. You don't have to subscribe to Bookmap. There's lots of other ones. There's Quant Tower. There's various depths of market platforms, but you have to subscribe to like Rhythmic. Rhythmic is the data feed. So no matter what platform you're using, you have to subscribe to Rhythmic. If you're looking for Bookmap, we have all of the links in our description and things like that. Okay, so what happened? First 5 minutes of power hour, okay, it opened. Did we make any new highs? Look at our wicks. No. Okay, so we still have a lower high here and a lower high. It came down, yes, but look at it building now. Okay, so it came down. Did we break any lows? No. Did we break this 50% of this candle? No. So we're still in that barcoding. It was a little bit of a liquidity grab because it's open of hourly candle, that volatility. Now if we continue push up, guys, this is going to be a bullish break. Let's see if we can take out all of this heat above us. Continue. Look at this 705 area. Like if we can chew this, this will be a nice move to the upside. Maybe we'll fill, but look, it's coming up again, getting rejected. So you see, did we make a new high? No. With all of that volume that came in, did we break out of there? Not yet. So continue to push back down. This is, it's frustrating, but this is barcoding. You have to remain patient. You got to understand, sellers are trying to sell, buyers are trying to buy. Sellers are selling, buyers are buying. This is a level in the market where we're in this auction where there's a lot of transactions trading at a very tight area. So there's nothing you and I can do. Me and you are not going to move this market. We have to allow the market to do naturally what it's doing. And we're right back in this area of consolidation. It might trade inside here for a little bit longer. We might, after the call, start breaking out bullish up here, or it's going to lose this type of support down here and drop. But there could also be a liquidity grab. Don't always just think to sell below here. It might be a red candle that comes down quickly, picks up a wick, and then kind of comes back up again for that bigger move. Kind of got to go with the flow of the market. It started our call. That huge red move coming down, and since then it's been coming up, but it's still holding 50% of this move. Each wick is higher low, higher low, higher low, but every time we come up it's lower high. So now you can start to see there's no real big change in the structure. We're just right back in here. If it really breaks down, maybe there's going to be a nice little sell-off. What you can do below here, if volume closes below and retests, and we lose this point of control, 50% of this candle drops, retest, what you can do is flip. If it closes below, you flip this zone red and see if it will come back and get rejected in there, and maybe you've identified your new area of supply. It comes down, retest, push, you sell, place your stop loss like inside maybe this box or a little higher. Maybe you're watching it come down and you're collecting some end of day bearish pips where the market is going to sell off. Okay, so you see it failed to break the highs. Did any volume close above here? No. I didn't see any kind of real good volume close above here. We got rejected at that 200, but again, we're trading right at this 9 and 200. So, and we're right back in this box. See, it comes down and bids are still bringing it up. So you maybe have to wait a little bit longer, guys. Okay, we can't force trades. One thing as traders is you can't force trades. The market will move where it wants to move. You and I, we're not going to move the market. So we literally have to let it come to us. Okay. Yeah. Hey, URM. Yeah, it might retrace to the fair value gap. Yeah, absolutely. So if you understand where the fair value gap is, that's where it could retrace down in there. Maybe pick up liquidity and continue going. So yeah, as long as you understand those concepts, that's perfect. Okay, guys, thank you guys so much. I appreciate all of you guys, but I got to go grab my kids right now. If you guys can leave a like button, subscribe, notification, share this video with all your friends if they want to learn how to trade. The more, the better, then the more free education like this will do. We love live trading. Everybody loves live trading, but also some live education is very important too. You know, we can break down the candlestick families and learn like that. So you know what, when I said a hanging man candle, make sure you guys understand what a hanging man candle is. So you understand all these terms and you really understand. I know a lot of traders can identify what a hanging man man candle is. Like they can point on a chart and say that's a hanging man candle. But when I ask you, can you tell me in detail, break down that candle? How did it develop? How did it open? And why did it close as a hanging man? Tell me what's going on in there. That's the information that you got to continue to learn. Everyone can just point at a candle and say that's a bullish engulfing candle. But understand what is going on inside that candle with the volume. Where does it close? Where does it open? Why are retracements coming to that particular area in that body of that candle? That's the more important things. Anybody can name a candle, okay? That's not the name of this game. Trading is not naming zones, okay? Whether you want to call this an order block or a consolidation zone or an accumulation distribution zone or a mitigation zone or a trap or whatever the hell you want to call this, okay? They're just different names, but make sure this volume that's moving in here, that's what you want to understand, what's going on in there, okay? I can leave this as a no-name zone. We don't even have to call it a name. All we can talk about is what's going on with the volume, okay? I feel like a lot of traders are getting too confused with all the meanings of these different zones. Who gives a shit what they're called? Figure out what's most important is this volume. Learn what's moving the markets. A box, Thomas, if you want to call it a box, that's perfect. We call it a box and we're all on the same page. This is a box in the market, but what's going on inside the box with the volume? That's what we got to understand, okay? And then that's what I'm finding. There's too much going on. Like back when I started trading, it was just real simple, guys. Now I'm even getting confused as a trader today with just everyone just explaining a support level, calling it a funny name, and then just going with it and then when I look at it, I'm like, guys, it's a support zone. We don't need all of those big fancy words. It's nothing. I don't even know. I'm getting confused myself, guys, with all of these names. So I keep it simple. If you want to learn simple trading, yet effective trading, then you're in the right place. If you want to learn all fancy names for everything, then you got to look up those things. Okay, guys, that's it for me. Thank you, guys. Have a good day. Snipers, I'll be back for Live London, okay, 3 a.m. Eastern. We'll go till 6:30, and then Big Dave will take over Tuesday, Wednesday, Thursday. Guys, look we're coming right back up, okay? Look at what's going on, okay? I got to grab my kids, but let's watch how it continues to build in here, okay? If it closes back above here and it closes strong, we might get that bullish move. But also watch down here. We still have not broke anything, okay? It's still accumulating. Okay, guys, thank you guys so much. I appreciate all of you guys. God bless. I hope you guys enjoyed today's educational session and had some fun. You learned something new, and let's continue this momentum tomorrow and moving forward. Tomorrow, guys, we have a 4-hour day on YouTube, 11 to 3. Don't miss out, okay? So hit that like, subscribe. We'll go over more charts tomorrow. Today, I just wanted to focus on one chart. I wanted everyone tapped in, dialed in on price action, as opposed to just jumping from gold to oil to GBP USD to all over the place. I want you guys to really learn as much as you can on one chart, and then you can use it towards whatever you want to trade, okay? Thank you, guys. Appreciate all of you guys. God bless. Enjoy your Monday, and we'll see you guys tomorrow. Guys in Zoom, I'll see you guys London. Have a good night, everyone. Thank you, guys. Appreciate all of you guys.
Hey guys, good morning.
Enjoy your day today, guys.
Welcome
11% get out of the markets. You're done.
My name is Dave, guys. My partner's
Maybe
Ron.
take the
Let's
day
get
off
down
tomorrow,
to business
okay,
here,
bro?
guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.